managerial accounting, planning and control, the budgeting process. Now, the complete set of budgets is called the master budget. The starting point for preparing this master budget or set of budgets is a sales forecast. Now recall that we said that a budget is nothing more than a financial plan, and that financial plan is what it's going to cost us and how much revenue we can generate in accomplishing certain goals of the organization. Well, the sales forecast is going to be for the expected volume that is either necessary to accomplish our goals or that we expect we can actually accomplish in the next period. So that sales forecast is going to be in the form of units of product or service. And then we'll take those units at our expected sales price and translate that into sales dollars. Our sales budget itself is the units times the sales dollars. Now, from the units forecast, if we're a manufacturer, then we have to plan how many units we need to produce. If we're a merchandiser, then we have to plan for how much inventory do we have to buy. So from the units sales forecast, the next thing that a manufacturer would do is to prepare a production budget. And out of the production budget, we then need to figure out, all right, well, how much materials do we need to meet production and have a minimum inventory level? How many labor hours do we need to meet production? How much overhead cost do we expect to incur? So out of the production budget, we then would prepare a materials purchases budget, a direct labor budget, and a manufacturing overhead budget, both variable and fixed. And of course, units, hours, and the cost of acquiring. What do we expect to have to pay for those materials? What do we expect to have to pay per hour for employees? What do we expect the utility bills to be, and that sort of thing? So not just volume measures, but we take those volume measures and then translate them into dollar amounts of cost for these items. And in addition to the production budgets that have to be prepared, also from the units and the sales dollars budgets, we will develop projected selling and administrative cost. So a selling and admin budget would be prepared. Then we would take the dollar amounts, the projected revenues, minus the projected costs for all of these items, and from those we would prepare a cash budget. Now the cash budget does two things, of course, or I guess maybe three things. It tells us how much cash we expect to be receiving from customers, whether it be from cash sales or collections on account, and then how much we expect to have to pay in cash, again for materials, labor, overhead items, selling and administrative, and then from those whether we're going to have an excess of cash in particular months or quarters in the budget period, or whether we'll have a deficit of cash in a particular month within that budget period. So from the cash budget, we will be able to estimate our financing needs. Will we need to borrow money in May to cover our operating expenses? Or will we have sufficient cash flow from operations to pay those operating expenses? So what are our financing needs? Or whether or not we will be able to take advantage of investing opportunities. Will we have more cash than is needed for operating activities, and then can we use that to buy investments to make a little more money in the short run? Or can we use that, going back to the financing, to pay off some debt and save ourselves some interest in the period? So the cash budget is derived from all of the cost and cash inflows estimated from these preceding budgets. And then finally, once we've prepared all of these, we will prepare what are called pro forma, or budgeted financial statements. From the sales forecast and the expenses, we'll prepare a pro forma or budgeted income statement. From the projected inventories of materials, work in process, finished goods, supplies, and so forth. We'll, as well as accounts payable that arise from this. We will prepare a budgeted balance sheet and, of course, a budgeted cash flow statement. So the final step in the budgeting process is the preparation of those projected or pro forma financial statements. And then from this process, we can let the investing world know what we expect will be our profit levels in each quarter and at the end of the next year. And then they too will be evaluating our performance, just as we will be evaluating our performance throughout the period.